I ended up being the number one sales rep over a 12-month period out of 973 JP Morgan reps, and made way too much money at 25 years old. And that was kind of the pivotal moment as I realized I wanted to be out interacting with people, educating small business owners, and wow, you could get paid for this.
So Curtis Edwards is a high-octane blend of medical sales hustle and investment savvy. He cut his teeth at companies like JP Morgan and Merrill Lynch, where he mastered the art of performance under pressure. He then moved on to a career at Stryker, where he started as a medical sales rep and quickly moved up to running global marketing divisions and launching products all around the world. Now, as managing partner at Hudson Investing, Curtis helps high-income earners turn commission checks and surgical salaries into serious real estate portfolios.
I took 6 months off and really reevaluated my entire net worth, my entire retirement, and I called it net worth analysis.
This is my time. I'm on the ride.
Hi, I'm Kyle Stevenson, and you're listening to the Assets and Orthopedics Podcast. This show is for high-income professionals who want to think like the wealthy. We focus on elevating mindsets, building empires, and creating a lasting legacy. Our goal is to empower you with financial intelligence, long-term strategies, and the mindset shifts necessary to achieve true financial freedom. We dive into real estate investing, entrepreneurship, and wealth-building systems that help you break free from the grind and live with purpose. At Legacy RX, we live by a simple creed. Be bold, embrace the hunt, unleash the beast. It's time to take action, design a life of purpose, and fearlessly pursue the freedom you deserve. Enjoy the podcast. Hello and welcome to the Assets and Orthopedics Podcast. This is your host, Kyle Stevenson. It is with great pleasure that I introduce you all to Mr. Curtis Edwards. Welcome to the show, sir.
Thank you, Kyle.
Yeah, Curtis. I mean, we were at the track yesterday, living it up in the pits, seeing all the drivers, which is pretty awesome.
Yeah, what a great day, dude, to kind of bring, our local, product that puts us on the global scale, interact with a lot of our friends, and Need for Speed, man. It was a great day.
It was, man. Just hearing the roars of those cars is insane. So Curtis Edwards is a high-octane blend of medical sales hustle and investment savvy. He cut his teeth at companies like JP Morgan and Merrill Lynch, where he mastered the art of performance under pressure. He then moved on to a career at Stryker, where he started as a medical sales rep and quickly moved up to running global marketing divisions and launching products all around the world. He even got a global perspective by living in Europe and Australia. Now, as managing partner at Hudson Investing, Curtis helps high-income earners turn commission checks and surgical salaries into serious real estate portfolios. He's been in the OR, on the sales floor, and now he's in the deal room. Whether it's raising capital or mentoring professionals out of the rat race, Curtis brings energy, honesty, and clarity to wealth building. All right, man. So take us back. Where did the grind begin for you? Did it start in college? Did it start when you were a young kid? When did it start for you?
Yeah, it started very young. I had two very successful grandparents that were in my life from day one. I always like to say it's almost like I had the privilege of having three fathers, and they all brought a unique skill set. And I ended up doing business with both grandparents and really working for one of those grandparents, at a very young age. And, he had a military background, and, you were only allowed to mess up once. And he was totally fine if you messed up once. But if you made that same mistake again, that's when the consequences, even at a young age, ratcheted up. So, for me, that's really my first remembrance of the grind, but also the recession of, I think it was like July of 1990, and it was known as the jobless recession, right? Each recession has a name. And, my dad ended up losing his job during that time. And I remember that being so foreign to us. And he had to reinvent himself. And watching my dad reinvent himself during that recession and the combination of what I just said about my grandparents gave me just a unique perspective on what needed to be done at that time, at an age of 12, 13, 14 years old.
Wow, that's great. And where'd you grow up?
Yeah, so born and raised Columbus, Ohio. So for any of those Michigan listeners out there, I always say I love the Michigan Ohio State rivalry. Without Michigan winning the past four in a row, it really hasn't been a rivalry in the past 20 years. And so I'm all for it. But yeah, born and raised Columbus, Ohio. I am a Buckeyes fan. I feel like I'm a respectful Buckeyes fan. I like to get that out there. But yeah, man, that's where it all started back in the Midwest.
And where'd you go to college? You go to Ohio State?
No. So I looked at Ohio State for soccer. I looked at Rollins College down in Florida and ended up at Butler University. It hit all the marks for me. It was Division I, soccer, good academics, far enough away that your parents couldn't come, visit you all the time, but close enough to get home. And it was out of state. So yeah, ended up at Butler and graduated in 2002.
That's great. Awesome school. I actually made this comment the other day because we live on the north side of Indianapolis. A little, it's an affluent area, right? Westfield, Indiana.
Yeah.
And I see Butler license plates all over the place. Like the nicest cars seem to be Butler, right? And I went to University of Indianapolis, played football and baseball there.
Right.
And I laugh. I'm like, man, if I knew then what I know now, I feel like there's more money at Butler, whether that's, older people giving back or what. I don't know what that is, but it just seems like there's a lot of money, a lot of good connections with Butler. Maybe I should have taken that route.
Yeah, it is a smaller school. I think undergrad it's never really gotten over 5,000, but I feel like I remember it being expensive back then. Luckily there were athletic and educational scholarships available to make it even possible. But yeah, I think a combination of a small liberal arts school that has a high price tag, is part of that for sure.
Yeah, that's true. Yep. So, all right. Speaking of college, this is a two-part question. Did you aspire to do something in the financial realm or real estate investing at some point? Was that an aspiration for you? Did you know you were going to do that when you were studying in college? And number two, you have a presentation where you educate college kids on reasons why you don't need college. So explain that to us.
Yeah, so I really had no idea what I wanted to do uh, when I graduated college. I didn't even know that sales was an option. There weren't really any courses around that. And I was only focused on three things: playing soccer at the highest ability that I had, keeping my grades up to maintain those scholarships, both academic and soccer. And then getting involved in the local fraternity that I was involved in and trying to juggle those three things. It was more about just get to class and figure the rest out later. I will say one of my grandfathers, guided me in what major I chose. And he said, whatever you do, get a finance degree with a second degree in accounting. And so I was a double major, finance and accounting. And I would say it was some great advice from my grandfather. But like I said, I had no idea what my first job was going to be really until that first semester senior year when I actually landed a job at a career fair. And, going to your second question about, you and I have talked, I've got essentially a whole curriculum built out on my phone. I've been picking at it for about 10 years. And, I call it Life University. And I honestly feel, who knows what college is going to look like in 10 or 20 or 15 years. And I know that these skill sets that none of us learn in college, we only learn in the real world. God, I always wonder, going in debt this much or taking this Life University curriculum over 1 year, if you could do an A and B test on that with identical twins and see who comes out, I've always be interested in that. So yeah.
Yeah, I think that's a great point. My wife and I have said, we tell our kids, they're so young right now, but it's like you create value in this world, you're going to make money, right?
Yeah.
Find your passion, find your purpose, and find something you're valuable that you can bring value to this world, and you'll make money. And so to your point, like, do we really need college? I think the answer to that is probably no. I mean, especially as expensive as it continues to become, right?
And not in its traditional format. I think we would all say leaving the nest and going away and living on your own and social interactions And those things where you got to look in the mirror and you got to figure it out, you can't get that anywhere else but college, right? Sports and clubs can teach you that, but that's kind of really the main thing we all take away from college, and some good times, right? But other than that, the curriculum of college is the curriculum I think that needs to be changed, and some sort of hybrid of that where you can get the social interaction, uh, and then this different curriculum, which is really what you and I talk about all the time, and what I mentor a lot of the young men and women, when I'm speaking at colleges about. But yeah, we're on the same page there.
Yeah, and I agree. And one more thing I'll say, because I talk to patients that maybe getting a teacher's secondary education degree, but they're at Butler University. It's like you're paying $60,000 a year, so you're gonna have all those loans. Don't let loans basically take over your life. And unfortunately, in medicine, we do have a ton of loans, and the federal government really will never get rid of those. That's something they need. So I think that's the other big part of it is make college affordable. If
Right.
it is something that we want kids to do. But all right, let's move on. So your first job was not Stryker, but I'm a physician, orthopedic surgeon, so we can talk about we can talk about J.P. Morgan, talk about Merrill Lynch, and then let's lead into Stryker and what you did there. You were there for what, 10 years?
Yeah, I was a Stryker at 10 years, and pretty unlikely path to get there. For me, I started out right out of school with Merrill Lynch, doing the investment banking, mergers and acquisitions. And I really learned how to evaluate a business, right? Income statements and balance sheets, but quickly realized that I felt confined to a cubicle. And so I moved on and got a rare opportunity to do financial sales for JP Morgan Chase. I remember I was 25 years old, had never done a sales position in my life, but my personality traits and all that really lined up well and what I had learned, in college. And I ended up being the number one sales rep over a 12-month period out of 973 JP Morgan reps, and made way too much money at 25 years old. And that was kind of the pivotal moment as I realized I wanted to be out interacting with people, educating small business owners, and wow, you could get paid for this. And your compensation and your bonuses weren't tied to the class. Like everybody at Merrill Lynch made the same money, the same bonus when we were in those classes right out of college. And so when I started to break away from the herd there and think differently was a pivotal moment for me. And from that, I had all of this money and I didn't know what to do. And my grandfather's always expressed, invest in yourself, bet on yourself. I learned risk adjusted return and calculated risk in those early Merrill Lynch and JP Morgan jobs. So what did I do with that money? I bet on myself and I went the entrepreneurial route for the first time in my life. And I started a pizza company in probably the second most competitive market in the United States, Chicago. And none of us knew the Black Swan event around the corner. A year and a half later, the GFC hit. 40,000 people lost their jobs in downtown Chicago. And that's where I feel like I got my street cred MBA, starting that pizza restaurant, successfully exiting it and navigating through the GFC. But it was right around that time where I started to play a bunch of softball competitively in Chicago. And lo and behold, a bunch of Stryker reps in the endoscopy division playing softball. I knew I wanted to get back into sales. And the most competitive sales job in 2006 to 9 window wasn't technology or SaaS sales. It was medical device, and specifically sports medicine with my background. And so that's how I got into Stryker. Sports medicine had broken off from endoscopy for the first time and had its own first division. And so I was one of the first 30 sales reps hired for Stryker Sports Medicine. And I remember in the sales class, everybody had nicknames when you came in that the hiring managers gave you. And I was known as the pizza guy. So the pizza guy from Chicago. And that's kind of how it all led into that 10-year epic journey around the world at Stryker.
That's great, man. Very cool. Good for you. With Stryker, yeah, I mean, there's a bit of a, not to be stereotypical, but this is similar to orthopedic surgeons. Like Stryker loves to hire athletes, especially high level athletes, like a Division I athlete, to come work because they know that you guys work your butts off. You have, you're disciplined. You'll do big things with them, right?
Yeah, I think the discipline is a huge part of it. Plus, Stryker does a Gallup test, and 80% of people don't pass that test. But what they're trying to figure out, right, is your work ethic, your IQ and EQ balance, and can you grind, but also articulate the complexities, right, of these medical procedures, right? You guys as surgeons are the experts in that procedure and all the things that can go wrong. But there's so many different technologies out there. There's no way for you guys to be experts in the equipment that we're bringing into that room.
Yes, exactly. Yeah. So, to that point, like most surgeons are friends with our medical sales reps. Could you give us a little tidbit of day in the life of a medical sales rep, and what's something that we don't know, we don't see the behind the scenes as a
Yeah,
surgeon?
it's a good question. And maybe I'll surprise you with this answer. You'll probably get a little laugh out of it. But if I had to describe the life as a medical device rep, it's wait some more, game time, drive around a bunch, wait some more, right? It's you're waiting a lot, right? As you guys are bouncing around from multiple ORs, we're sitting in those lounges talking to the nurses, in basements without windows, grabbing uncleaned equipment. But, for me, you know, what I loved about it more than anything is that high stress environment of the OR and how calm the surgeon is. But if the surgeon has the right protocol with the nurses and the rep in that room, it all works together. And you take a high stress situation and it feels like, you're playing Mozart in there and how smooth it is. And that was the closest thing to me after college of a penalty kick, soccer situation where you got to make the save or not. That type of rush that I got from that environment, I gravitated towards.
Yeah, that's awesome. You're so right, man. Um, and what I love is, a good medical sales rep, when something goes wrong, say something's not in the tray or something drops on the floor, and that experienced medical sales rep has an answer for you. It's the
I
best
love
thing
it.
ever.
I love that you say that because one of my biggest surgeons was at University of Chicago, and he would give speeches. Right, he was a consultant, and he would give speeches to some of these sales rep classes. And I got embarrassed at the time, but one of his slides was "Be like Kurt," right? And but it was because I could tell 45 minutes ahead of time something was missing from the tray instead of sitting on the back wall, and I disappeared from the room. And he would say, "Curtis, is everything okay?" And I just said it will be. And he knew I was going to figure something out. And then by the time he reached his right hand out for that piece, it was there. But it's all those proactive thinking, right? That you as a surgeon and the rep, and when you're in sync there, man, it's a really fun environment.
Yes, you're absolutely right. I like the comparison, the analogy to Mozart. It's like it's a nice symphony, just good harmony in the OR.
Yeah, or depending on the surgeon, maybe Metallica.
There you go, man. Get after it. We had some Morgan Wallen today, I think. So, all right, let's move on. Stryker, medical sales rep, and then you tell me about your global experience. How did that come about? How did you move up so quickly? And just fill us in.
Yeah, so I remember Stryker brought me in as a sales rep, and I'm selling, from Mercy Hospital to Michigan City and Chicago, a big territory, and I loved it. But I think they saw that I started a pizza company. I raised some money for it. I put my own money. I had to market that. I had to pivot. So they saw the strategic side of it with the investment banking background, and they quickly came to me and said, "Hey, do you want to move out to San Francisco and run our shoulder and knee marketing divisions?" And so I said yes to that, even though I love selling, and got into something that I knew really nothing about from a technical background, marketing. And that kind of just kept blossoming. I was working with the R&D department and surgeons and reps, trying to get the best products out there. And the opportunity came up where they said, "Hey, we are about to launch all of our products in Europe. Do you want to go be based in London, but cover all of Europe?" And I had to say yes, right? And
Hmm.
then that led to, "Hey, do you want to go do this in Asia Pacific?" And so I moved down to Sydney, Australia, covering all of Asia Pacific. And those experiences of running marketing divisions, multiple divisions outside of sports medicine, and then also leading sales teams and launching products. It was one of the coolest 10-year windows in my life, but the cultural differences in learning to listen more, especially when there's a language barrier, and all of that has really just paid dividends, in the field that I'm in now, in a multifamily syndicate.
Mm-hmm. Yeah. Yeah, exactly. So with that being said, I talk to medical sales reps every day. What were your investments at the time? Were you doing mostly the stocks and bonds, Roth IRA? What were you doing then and compared to, kind of what you're doing now?
Yeah, well, early on, right, I was in the investment club at Butler. And so I was learning about stocks and investing. I think by today's standards wouldn't be young, but back in 1998, you were investing at that young age and you had a stock portfolio and you were actively managing it was a little ahead of its time. But, I was just getting frustrated. I was told, hey, invest in Cisco. I'll date myself and you'll retire on Cisco stock. Well, that stock went absolutely nowhere and then it went down 50%, right? And so the light bulb moment happened for me in 2010 when I realized that my dad, I told you about him reinventing himself. He got out of a family business and got into residential real estate, right? He's a natural born educator and salesperson, and he took off in real estate, and he was doing flips, and he became one of the top realtors in Ohio. And I realized in 2010 I've got inside information and it's legal, right? Like I literally have inside information on, hey, buy in this school system, buy this floor plan. Here's a list of subcontractors that you could add a third bedroom in the basement with an egress window and increase the value. And so I started taking all of my excess bonuses and money that I was saving, and I started buying a single family home portfolio in one of the top school systems in the country, right? And I had all that inside information, and that was the light bulb moment for me. Was in 2010.
That's awesome. That's a good time to have that, right?
Yeah.
Because the
Once
crash
again,
happened in '08. Yeah, go ahead.
like we talk about real estate, location, 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 and then the rest is timing, right? I mean,
Mm-hmm.
if I would have been 50 instead of 45 right now, then maybe I would have got into that in 2004 and 5, right? And that would have been a horrible time to get into that right before the GFC, right? And so, yeah, there's a little bit of luck involved in there, and then there's a little bit of leaning into that uncomfortable risk-adjusted return curve that I feel like I've done such a great job, ahead of the curve on that from my financial background.
Yeah. No, that's good. That's good. And so soon I want to get into the current market and stuff, but let's just keep going with this. Um, all right, how'd you go from Stryker to Hudson Investing? I know we skipped something in between there.
Yeah. No, I mean, you're pretty much spot on. So after the 10 years of Stryker ended, I was kind of missing deals, numbers, real estate, right? My essential background.
Hmm.
And so right before COVID hit and I came back from Australia, I was looking to start my own real estate syndicate. And essentially, a friend of a friend said, hey, don't start your own. Let me put you in contact with this syndicate where you can kind of, get your street cred in a syndicate and learn a bunch in a quick year. And so I did that in 2020, and one of the best things I ever did. And then I met Kent Ritter, who had
Hmm.
started Hudson Investing much earlier, and Kent, came from an entrepreneurial background as well. And so it was this match made in heaven of Hudson Investing was just about to scale, but Kent needed somebody to manage the capital side, the marketing side, and the education side, while he focused on the acquisitions and the debt side of the business.
Hmm.
And so Kent and I, we essentially dated for a year and determined this was a great partnership. And that's essentially how I came off of 10 years at Medical Device, but came full circle back to my investment banking, real estate background from 2010 and really got into pure multifamily syndication.
Hmm. Love that. And I know both you and Kent. And so I can say this, you guys would have both been very successful individually, But coming together with your personalities and your strengths just brings this powerful combination, right? To make Hudson Investing a really big thing here, not just locally, but really across the country.
Yeah, no, I appreciate the compliment, and we do talk about it being a superpower where when you have two, we call it, a double-headed dragon here, where if you have an integrator and a visionary, but if both people can do a little bit of both of those and the ego, right, is suppressed enough where there's plenty of times where Kent wants to do some of the things I'm doing, or I want to do some of the things he's doing, but knowing who's better at that and being the most efficient, you have to do that, right? When you're trying to scale a business, right? And you're also, limited on your head count and how many people you can have on the team, right? And so the other irony in all that was Kent's got a very high profile business coach that has coached some of the most successful syndicates around the country. And I went out to a conference, and because we had a VIP booth, I got access to this coach for a year. And that coach was coaching me to go out on my own, and then made the connection that Kent and I had met. And it was just wild. And, that's also was positive confirmation that us combining, right, would be gasoline on the fire versus both of us going out on our own.
Yeah. Yep. Exactly. Yeah, man. I mean, your personality lends to what you're doing. Like you got the charisma, you're, the outgoing, fun guy. Like people want to be around you, which is cool. And Kent's very cerebral, smart guy. He's got personality as well. But again, you guys just bring that powerful combination to help each other out. And you're going to grow this thing to be big. I know it. So tell us about what you guys are doing now. Like what deals, let me just start by saying this, these last 4 years, I think a lot of people would say real estate, was a little bit tumultuous, right? We had COVID. And basically from 2010 to 2019, real estate just went up. So then 2020 comes around, and these last few years, especially the last couple of years, have been tough. So what are you guys doing at Hudson? What are you guys investing in? What do you guys like, especially in this current market?
No, it's a great question. Everybody, when I'm talking to people and they have their sheet of questions, right, when they're, essentially interviewing me as a GP or a syndicate, and you can tell they've been on a course and they all have the same sheet of questions. And the first question is like, well, let me see your track record. Well, what they don't understand is everybody had a great track record if they started any type of syndicate from, 2010, 11, all the way through 21. And so a lot of these track records for the savvy investors, they know that these track records are inflated.
Yep.
I think what we're really proud about at Hudson is most of our track record in our exits in our current portfolio was built right between 2020 and 2025 here. And so I think that's something investors need to pay attention to, but also how did we double our investor base, double our capital raise, and double our acquisitions in what everyone's calling probably the most difficult commercial real estate space in the past 15 years? Well, we did that by not forcing things, right? And so when you look at a value add deal, which is predominantly what we do, you could not get value add deals to pencil out as those interest rates rose so dramatically in that 2-year time frame, right, Kyle? But back to Kent and I having that entrepreneurial background. Kent sold a very successful consulting company. I sold a pizza company and another concept. And all syndication is in these multifamily deals, they're just business transactions where you have to execute a game plan. And so we realized that we were sitting on some vacant pieces of land. Had we ever done a development deal before? No. But we knew we couldn't get value add to pencil out. But we knew there was something called TIF, tax incremental financing. Public-private partnership is another way to put it. And we knew you could work with the municipalities to get TIF financing. And so we started asking a bunch of questions. Kent leveraged one of his mentors, and we self-taught ourselves TIF financing. And we did a development deal in 2022, and that was a great deal for us, right? And then we did another development deal with TIF, and then we did a BTR, build to rent, and we bought it when it was at 60% occupancy where the New York syndicates would only buy it at 90% occupancy. Well, we knew the market so well in Northern Indiana that we knew we could take the risk at 60% and do the lease up. And that's how we arbitrage the value to give back to our investors. And so we had to think outside the box in our space of multifamily workforce housing. And now we're seeing multifamily start to come back to us. But it's that combination of analytical, entrepreneurial spirit and also being the right size. We're this perfect size syndicate that we are super sophisticated, but operate in a smaller pond of 80 to 250 units. And so a combination of all three of those, Kyle, really allows us to adjust to the changing tides of this macro economy much quicker than the large syndicates that I compare to a cruise liner, right? It's much harder to change the direction of a cruise liner, than a speedboat right now.
Yeah, that's a great analogy. And I just love, what you guys are doing. You talk to investors all over the country, or real estate syndicates all over the country, and everybody wants to invest in Indianapolis. Everybody wants to invest in these markets right around here that you guys are investing in. And it's hard for them to get in, right? They don't understand it well enough. You guys understand it so well that you're able to put in LOIs quickly and get these deals before anybody else.
Yeah, and I got to thank Kent for that, right? I mean, Kent graduated from the IU Kelley School of Business, which is notorious for producing some of the greatest real estate minds, right? And when Kent's looking at all the different businesses to start up, right, post consulting, he knew that in the entire commercial real estate space, if you look back over the past 60 years, one of the best risk adjusted returns, right, is workforce housing, right? Not public storage or office space or retail or land. It's that workforce housing, right? And it's because you have low income workforce and luxury. And we always say it doesn't matter the economic climate, right? If you're in an economic boom, the low income wants to come up to workforce. And if there's a black swan event or a recession, luxury wants to come down to workforce. And if you go into markets where the supply and demand is already into your favor and you're not choosing shiny objects like Phoenix in the Sun Belt, if you choose these boring markets based on what the data says and you stay ahead of the job, population growth, and supply and demand curves, right? And you're applying that in what we think is the best asset inside commercial real estate, you really set yourself up for success. And so Kent had that in his head, and then he happened to move back to Indianapolis, and you always start in your own backyard. And now everything's starting to come to us here, and we've developed, right, over the past 5 or 6 years, we know how much money to spend on a renovation to get the ROI. So not overspending on the business plan is a key part of hitting that targeted IRR. And so I have to thank Kent for landing back in Indianapolis and, having enough time to become experts in this market before, the spotlight comes on us.
Yeah, no, that's good. It's such a good area. And I was even I told you this yesterday.
Yeah.
I was in Washington, D.C. over the weekend or last week and met with some of our Indiana representatives and senators that are out in D.C. And they were just talking about how much manufacturing and how many more jobs are coming to this area, to Fort Wayne, to Indianapolis proper. There's already a ton of jobs here, right? But there's going to be more. So I don't know how the state can keep growing so fast, but it is. It's going to.
It will. I think most people, especially your base, your listeners that are in the Midwest, that LEAP Innovation District, that's the largest state-funded project in history that's anchored by Eli Lilly, one of the most important companies in Indiana, with $9 billion investment up in that Lebanon area. And if you think about it, people are like, where's Lebanon? Well, you have Chicago, then you have Lafayette, right, which is Purdue University, a lot of engineers, and then you have Lebanon, and then you hit Indianapolis. And so that they're trying to turn that into an innovation tech corridor, right? And it's driving a ton of growth in the state. But then you also have everything else you're talking about, Fort Wayne, and you have the Fishers overgrowth down into Fortville. And so there are several growth corridors in this state, and there's a lot of room to run.
Yep, that's awesome, man. Hudson Investing. We'll give a shout out to you guys, and we'll put you in the show notes so that people can find you. All right, so let's go macro for a little bit. We're talking a lot of real estate, which I love, but I will say from a physician standpoint, a lot of physicians out there feel stuck, feel burnt out. They are investing in their 401k, investing in the stock market. They're going to work for 30 plus years and then retire and live off that, right? Why is that not the best advice? First of all,
It's, I'm reading a great book called Outlive by Peter Attia,
mm-hmm.
and it talks about two curves. You have your lifespan curve, right? Mm-hmm. And then you have your essential
health span
curve, right? And what's the point of living all those years, right, if you can't enjoy them during the optimal health, right? And so I think that's the biggest mistake a lot of people are making is not reevaluating the path that they're on. I always say to the guys that I mentor, no one's changed careers, more than me. And I mean that I think I've had 15 different jobs up until 45. Now, each one of those jobs has built on each other. And I like to give the analogy, like the warehouse analogy of how much of that warehouse space is being occupied. And I like to tell, these younger, men and women that even at 45, I feel like I'm only pushing into about 85% of my potential of like, what do I love to do every day? But what's my greatest strengths and how can I give back? Right. Mm-hmm. And so, but you get a skill set like a surgeon, a lawyer, and an athlete in some of these. And sometimes you get so tied into that versus thinking about other passive ways to make money, like you've done yourself as well, right? There's a lot of other ways to retire more efficiently, but you have to take the time now. And, why do people not do it? I think it's because they don't have the time. They don't have the time to step back and pause, take 6 months, learn, right? You have jobs, you have kids, you have all these demands. I didn't have those at that time in the career. I took 6 months off and really reevaluated my entire net worth, my entire retirement, and I called it net worth analysis. I looked at all of these aspects, and it's like a health checkup, but I was doing it on my net worth. What was unhealthy, inefficient? And that's where I started to put together a different plan to bend that retirement curve vertically up for me, right? And I think it, like you said, back to your question, it's just a lack of time, right? And then trust. Who do they trust to help them kind of bend that curve?
Yeah, well, that is a good way to put it. What do you think is broken in financial advice? I would say, a lot of things I've learned recently is, I had a financial advisor, great guy, but, to a degree, they're salesmen. Like I had money in my S&P 500 over here. I had money, with them, and I was comparing our rates of return, and mine was just as good, if not better, in the S&P 500. So he wasn't bringing much more value to me, and I was paying him 1%. So I was like, why do I even need him? So what do you think is broken in the financial advisor world?
Well, before I even get into the financial advisor world, just in general, the financial literacy, as I call it in this country, is really high. You got really, really smart people, right? Teachers, doctors, lawyers, you go on and on, but they think the only option they have is to hand their money and all decisions within that money over to a financial advisor, right? And so I think that system and that belief is broken. And so the whole 80-20 into equities and bonds, and when you look at the traditional allocation, it's just dated. When you look at, I like to reference Tiger 21. So Tiger 21 is a group of some of the richest people in the United States. You have to have like 20 million of investable cash. Well, they publicize their allocations of their net worth. And these are some of the richest people sharing advanced tax strategies, advanced alternative investments. And when you look at how their net worth is allocated, you're somewhere in the 40 to 55% into real estate and alternative investments. And alternative investments tend to be a lot of real estate. And so somewhere in that 40 to 52 range, bringing down how much is in equities, right? And having some cash and then having some play money for the venture capital deals or the crypto, and keeping that under 5%. If that's how the richest people are allocating their money, that's kind of what I learned a while ago. That's kind of how I started taking my 90% equities and transitioning. And so it doesn't take much to get educated on how you should have your net worth allocated and have those difficult conversations with your financial advisor. I still have a financial advisor, but I control the conversation. And yeah, I have about 30% of my net worth in equities, right? Because it's an inefficient way to manage taxes in the future, right? Commercial real estate, specifically multifamily, gives me the most K1 losses in my team. I've got a CPA, I've got a financial advisor, I've got myself, and now we have a lot of levers to pull to maximize when I retire, how I retire in the most tax advantage way, right? And so what's broken? It's not the financial advisor isn't broken. It's how net worth and our agreement to how it's going to get distributed. So the system, right? The financial advisor gets paid usually on assets under management, and that whole system's evolved over the years. And so of course they're going to want most of that money over there. But what I love is that it's evolving to an RIA, a registered independent advisor. And you're seeing a lot more alternative investments in my opinion, right? It's just my opinion, a better allocation of net worth so that people can retire, wealthier and happier.
Mm-hmm. Yeah. Great work, man. You're spot on. I have a slide on, so I have a presentation for residents and physicians about, buying assets and minimizing taxes and all that stuff. And so one of the slides has to do with comparing the traditional middle class investment allocation to the wealthy. And you're exactly right. It's like, us middle class or the middle class, 80 to 90% in stocks. And the wealthy are only putting about 25% in the stock market, 25 to 29%. So most of it is real estate and alternative investments.
Yeah, the amount of people I talk to, Kyle, that when I ask them, we do a high level net worth analysis, and their only real estate in their portfolio, Kyle, is their home. Mm-hmm. It blows me away. And then they usually say, I know, and I know I need to get more real estate. And I need an Airbnb or a flip, or I need to build a single family portfolio because that's what, I won't name the names, these other books or podcasts are preaching is single family homes and this, but it's an extremely inefficient way, right, to increase your returns and scale. Mm-hmm. And, my whole thoughts on Airbnb, that whole market's saturated and dead anyways. And so the most efficient way, and I don't really even care how you do it, is finding a syndicate that you trust. And there's so many different commercial real estate pieces that you can diversify into, and finding the right balance for you and your family, right? Everybody has the right balance. But yeah, I could go on and on this topic.
Yep. No, you're doing a great job of it. And yeah, I mean, I think I told you that Richard Wilson and I are starting Doctors Investor Club, and we want to, continue to educate physicians on thinking like the wealthy. And that's really what it comes down to. And so yeah, one of these days, once we, get some, start building this group, we'll have you and Kent come and speak to us.
Yeah, we'd love that, man.
All right, let's move on. We're going to start wrapping up here. But you and I have talked quite a bit. I mean, ever since I met you, it just feels like, we're always bouncing ideas off each other. You're such a smart guy, and you're ahead of me with all this stuff. So I love it, and I'm learning a ton. I always heard, don't be the smartest guy in the room. So I come and hang out with you and, Scott Jared and all these other guys. But you and I have talked about creating something fun, something like a Barstool Sports. You're a former medical sales rep, now real estate investor with charisma and good personality. And I'm a physician trying to educate other physicians and medical sales reps. So it seems like you and I could do something big with this, create a podcast, create some kind of environment to where we have these conversations raw, unfiltered, entertaining, something similar to a Barstool Sports. Yeah. I mean, what do you think about that?
I love it. And when you think about Life University, right, and you think about these different verticals of, you know, each podcast is specializing in a vertical. They all fall underneath the same ethos. And they're all appearing on each other's podcast. And you finally start to get efficiency, right? And you've got one that's focusing on alternative investments, one that's focusing on tax hacks, one that's focusing on setting up advanced tax strategies, trust, irrevocable trust, one that's specializing on self-directed IRAs, right? One that's on the infinite banking theory. And how do all of these work together and what levers do you push? Yeah. And I know, man, you and I have whiteboarded a couple times and I'm excited to, see where it goes. Because like I said, at the end of the day, when I left, the last sales job I had was that first year in medical device sales, right? And it was a grind. And all I do now, man, is it's educating. It's educating people and helping eradicate financial illiteracy in this country. One conversation or one group call or one, speaking event at a time.
Mm-hmm. Yep. That's awesome, man. All right. So one thing I want to mention, I was going to bring this up earlier in the podcast. You mentioned the word efficiency, and then you mentioned it probably 4 or 5 more times throughout the podcast. And I think that's one of the best words, honestly, because, all of our lives should be more efficient, not just in investing, but in investing, that's a big part of it. Don't put money over here and over here and over here and, be efficient with it. What's going to get you the best returns with the group that you trust, find them and move forward. And then the other thing is just your life in general. It's like, using your time efficiently to do things, get your workout in, hang out with your family, being intentional with your life. That's being efficient. So I do appreciate you saying that multiple times. All right. I like to finish by asking my guests 4 final questions. What book are you reading right now? And you told us already.
Well, I'm reading 2. The one I'd like for this question is Die with Zero. Shout out to Bill Perkins. I would say it's one of the most important books I've read in the past 10 years. I won't give the plot away or what it's about, but I would say anybody that's just interested in living happier, healthier, wealthier, living with more efficiency, and those type of topics, read the book Die with Zero. Super quick read.
Hey, how about this? I've tried to get him on my podcast. If you and I create this podcast with, the Barstool type feel, let's get him on because that would be epic.
100%. I saw he was having lunch at a place somewhere in the Virgin Islands. We were just there earlier for my mom's 70th birthday. And, I messaged him. He still, obviously doesn't know who we are at the time, but I would love that goal to get Bill on one of our podcasts.
It's a goal for sure. All right. So what advice would you give to your 25-year-old self?
I would say get your accreditation status ASAP.
That's great, man. Hey, on that note, because I didn't ask it earlier, but I want to, give me some advice for a 25, 30-year-old medical sales rep, and then advice for a 40-year-old physician.
Honestly, Kyle, it's the same answer. Understanding the power of accreditation. If you're a 30-year-old medical device sales rep and a 40-year-old surgeon, you should be accredited. Most people don't even know what an accredited investor is, that you have to make over this amount of money or this net worth. I mean, I remember I was an accredited investor at 26, Kyle, and I did not know what it meant until I was 29 or 30 years old. I lost 4 years of being able to double my money in 5 years versus the historical average in the stock market at 10. Like those 4 years, if I knew that advice at 26, I would probably be retired here at 45, right? Than the target that I have now.
Damn, that's a big deal. So, and also on that note, you mentioned this earlier, like, people saying that, oh, I have real estate. I own my own house. Well, when you are an accredited investor, your net worth cannot be tied to your permanent house.
Correct.
Right. Yep. It's everything minus your your house. So
So I have young men and women, right, that I'm talking to now who are at 24 choosing to rent or live at home with their parents on purpose to stack money and reach their accreditation status at the youngest age possible. And I love that when they listen and they hear it and they're kind of adapting at an early age. It's great, man.
yeah, that's awesome. All right. So what's your definition of wealth?
It's definitely changed over the decades, but I would say after, everything I've learned so far, it's achieving four freedoms, right? It's financial freedom, time freedom, geographic freedom, and freedom of purpose. And freedom of purpose is just being able to be your authentic self and punch into that. What is your best utility on this planet that you get enjoyment out, right? And do what you want. And so it's those, I call it the achieving those four freedoms.
Mm-hmm. Love it. All right, last one. Proverbs 11:25 states, "A generous person will prosper. Whoever refreshes others will be refreshed." If you could make a big impact by giving back, what would you or have you focused on?
Yeah, that's a great proverb. And for me, it's always been about making myself available to the youth when asked. I probably mentor over 15 young men and women, and I think they would all say we can text him, call him, we can not call him for 6 months and re-engage. And I'm just always available whenever they need it on, hey, it's a question on ROI, or should I get into single families, or I'm switching careers and I'm taking a back pay cut, but I'm going to get more, in retirement. So I don't know. That's how I would say I give back the most, through the traditional routes of some charities. And I speak pretty much every quarter at IU Kelley School of Business in their real estate classes. Yeah. So that's how I'd answer that.
Good for you. All right. So what is Hudson Investing up to right now? If people listen to this and they love it and they want to reach out to you, how do they find you, and what deals, do you maybe have going on that they could jump in on?
Yeah. And so I would just say HudsonInvesting.com. So HUDSON investing.com. It'll be in the show notes. That's the best place to get in touch with me. You can schedule a call. You can see our upcoming deals and our track record out there. You can also email me at Curtis. That's a C for Curtis at HudsonInvesting.com. I always respond usually within the same day. And yeah, we've got a deal that we're under LOI right now in the great state of Indiana, in a very up and coming market. And so I think we'll be raising for that. I would say mid-June all the way through the early parts of August, man. So excited to get that up on the website and get that out.
Dude, love it. Hey, thanks for coming on the show, brother. We are going to be doing a lot of big things together, so I'm excited. And yeah, we appreciate you.
Thanks, Kyle. Really appreciate all your support and getting to know you over the past year, man.
Absolutely.
This is my time. I'm on the rise. Can't hold me down.
Thank you for tuning in to the Assets and Orthopedics Podcast. If you're ready to elevate your mindset, build your empire, and create a lasting legacy, don't miss the inaugural Legacy RX Conference on October 24th and 25th in Indianapolis, Indiana. It will be a transformative weekend designed to help you unlock your potential, take bold action, and redefine your future. Visit LegacyRxConference.com to grab your ticket and join the movement. Until next time, be bold, embrace the hunt, unleash the beast.